Hello, everyone. Hi, Kevin. How's everyone doing? Hugo, Michael, Ingmar, Bill. Hi, Amira. I'm doing okay. Feel a little better. First night without a ball peen hammer hitting me on the head. Paul, how are you? Okay, so I took a shot last night on this opening in NASDAQ. So I'm still probing and protecting. You know, the consensus view is that everything's okay through year end, although there are stories about rebalancing towards later in the year. So I'm probing, taking partials, and protecting. So already took some nice points out of it. Now I have B stops at 12,555 where I got in on this. S&Ps actually, they too made new highs. And it's a possibility, this. Okay, possibility. Okay, that was me. All right. Anyway, really the star of the day is this, pounding the table on it, Euro pound on the Brexit news. So, I mean, this is a pretty big breakout over 90.80. Don't you think? So, I think there's a good possibility that we're going to take out this high. I know you can't chase it now. There were quite a few opportunities, especially this candle here. Anyway, you know, it's obvious now what your preferred long is, right? And your preferred short on strength. Some interesting action in gold when it was rejected from 1250, 1250, 1850. Hi, Monica. And we tried to rally here. 1840 rejected it. Back under 1820, you're probably looking at 1790. Actually, it's being driven by this. You see this blue line? I've had it in there for months. The speed line that it came off of in the Dixie. So I'm not saying that we're going to roar here. Your first sign that the dollar might be doing more than just bouncing would be closes back over 92. Okay, 92 was a big area. So, look at the RSI. We are diverging on the daily, but it's not exactly ideal, that we're at 23, even though we are diverging from the July low. So I think the ancillary markets might be better for shorts. And here again, on the 4 hour, we're still a little under 30. But I mean, the dollar is due to rally. But what I would wait for, and I may try it if this happens here, is if we get one more shot down here to the blue line. This could be one, this could be two, maybe we get a three. And what else? Talked about the short side of Aussie last week, that it was one dogging it. Looks like we have a little bit of a breakdown under 74.20. We'll see what happens there. And oil. This looks like it might be a false breakout up here. We did diverge at new highs. It almost looks a lot like the S&P chart, doesn't it? A little bit, right? So the S&Ps are holding this 50 on the 2 hour. Same with NASDAQ. And, I'm not talking about a crash, but I don't know, we could pull back to, you may want to pay attention to this week, the 2-week off numbers in NASDAQ, and it's where I would cover shorts. It's at 12,283. So that's 240 from here. and I think it's 3640 in the S&Ps. It is 3640, so still 46 handles away. And dollar wise, looking at the pound that got really pounded. And this one I'm a little aggravated on because I got stopped out on this last push up. That looks pretty ugly. So this may have been it. They cleaned out all the stops, including me. Actually, yeah, before it made a new high, it took me out. So pound does not look good. I think you have to sell, every rally now, maybe back towards 133.90, a 100 pip rally if the dollar goes down one more time. Except, it's binary. Maybe they'll come up with a deal and we'll go to 140. So anyway, currencies seem tougher to me than other trades on the board right now. So those are my views. My most significant view is right here. The best team on the net. Join them. Well, that's interesting. Greg went from being bearish cable to being bullish cable. There's some of Greg's work. So I recommend you become part of our trading family. Hang out with everyone in the trading room. And as far as markets, it's only a Monday. So we'll see what happens. I think that there's a decent chance that NAS is going to put in at least a correction, So we'll see what happens. I'm actually trading off of 15-minute charts. So, if we have something like this and we take out 12,450, the off number at 12.3, it's possible by the end of the week, one bad day. The stimulus package, maybe they're not going to be that happy with it. They don't have as much vaccine as they thought they'd have. Well, we're on lockdown again here in California. So the greedometer is at, hasn't been here in a long time in the S&Ps, in the stock market. So sentiment is there. So just probing the short side. You never know if it's a top or the top until you look in the rearview mirror, right? So we'll see. VIX trying to come out of the hole again. Nice little gap up today. I wouldn't be short volatility. Let me just say this, okay? I wouldn't be short volatility. So we'll see what happens. It could be I've seen wild Decembers. There's also a lot of cross currents, like I was talking about, the rebalancing, the tax selling, all of that happening this month. I did read about seasonally, December is one of the worst months for the dollar, one of its weakest months, but January tends to be one of its strongest months. So I will be looking for areas to get long the dollar going into the end of the month, maybe around the solstice when winter begins, late December. And with that being said, I'm going to bring Blake in, see what he's thinking here. The euro still really hasn't done anything wrong. It still looks good to me. And look at this momentum here. So I don't want to be short, but if the euro makes a new high and it drags cable up 100 pips, I don't know where it's out there though, greed meter on the 10th, Shane. Okay. But if the euro makes a new high, goes to like 22.5 or so, and it drags the pound up 100 pips, this is the one I'd go for. Okay. So use euro strength to put on a short in the pound. But don't go in hog wild, because we're going to have tape bombs there. Blake, how's your weekend?
Hey, good morning,
Hey,
Dale.
good morning, buddy.
Good. I actually worked all weekend.
Okay.
For those of you guys that don't know, my wife has a retail
Oh, that's
business.
right.
So,
Yeah.
I was at
Delivering.
her office, doing a lot of manual
Boxing.
labor. So that's what happens when, your
Yeah.
your significant others are, uh, entrepreneur. Yeah, I was
Yeah.
helping with all the shipping needs of my wife's business over the weekend. So that's what I spend my weekend doing. So
Okay.
yeah, it was fun.
Yeah. Your
But
partners.
some of you guys probably remember from last uh, couple Christmases. It's just it's this holiday season. It's not necessarily Christmas. Hell, my wife had to send out a huge amount of Hanukkah gifts this last week. So it's just
Oh, yeah.
holiday in general. But man,
That's
I
in
tell you,
2 days, I think, right?
huh?
Is it the ninth it
You're
starts?
you're you're the Jewish guy. I don't know.
I think the ninth. I'll
You're
light.
asking the wrong guy.
I'll hedge. I'll hedge and light a candle just in case.
Okay, yeah, you
Amir
should know
knows.
this, right?
Amir, when's Hanukkah start?
So
Yeah. All right.
anyway, no, so I've been out there, just kind of. It was really one of those weekends where I just slept and got up and worked and made sure the kids were fed because I take on the Mr. Mom duties this time of year as well. I'm just a caretaker, because my wife is really swamped. So
I have an
anyway,
idea for a novelty gift for Jewish FX traders. The dreidel has Hebrew letters on it when you spin it.
uh,
Just put currency symbols on the dreidel
yeah, there you
so
go.
that you know what to buy.
There
You
you go.
spin it, and if it comes up pound, you buy it. Comes up
That's
euro,
a
you buy.
that's a great idea, Dale. That's really a great idea.
Yeah, let's do it.
A currency dreidel.
The dreidel
Nice.
system.
Nice. Man, I do have my currency die around here somewhere. I think I
Uh,
sent one over to Steve years ago too,
yeah.
as well. So um anyway, so right now the euro just popped right back into positive territory. The cables bounced back a little bit. There's a headline that just came out: the UK rules out continuing EU trade talks next year. That comes from a spokesman. So uh, the pound actually went higher on that, and I thought it was going to actually move lower, but it moved higher because I think that really just illustrates that the cable is going to, or excuse me, the UK is going to wrap up these trade talks. It's kind of do or die time, if you will. Um, you know, Basically they're saying, hey, we got to get this done now, and if we don't get it done, then there's no reason to continue on. I think that's what they're basically saying here. But what we're seeing in the cables, we're seeing it, we're pushed up against technically where we should be stopping. We should be stopping somewhere around here, between here and like 133.15. We should find some resistance in the pound now. That doesn't mean it can't go higher. I'm just saying that technically that's what we're looking at. And I have to say this, that I think you guys have to approach the pound with, if you're going to trade it, you just have to, be, look for your entries, and then just realize it is all Brexit related. So if, you get stopped out of a trade, it has nothing to do with you. It has everything to do with Brexit, right? Or if if you happen to make money and you're like, well, I'm a genius. No, you were just lucky enough to be on the right side of that trade at that moment, because there's a lot of flows that are moving here that have to do with Brexit, and it's been flopping all over the place. On the long side and on the short side, you could be very lucky in either direction with this particular pair. I'll give you an example. Yesterday, and then I'll go into the charts here. Last night, there's like some progress on fisheries, and this is yesterday afternoon. And pre-market, we were trading at 133.80 something, and I bought it pre-market, just a little piece of it at 133.92, I think. And then and I was at my wife's office when I did this, because I saw a bunch of text messages go by, and then tweets, and I think I retweeted something out. And so I bought it pre-market because JP Morgan, we can execute like hours before most people can. And so I got into a long, and then it opened at 134, 134 and change. And I was up, 25, 30 pips or whatever it was. And all I did is I moved my stops to break even, and I just, I went to bed, and I was like, look, I'm either going to get up and I'm going to be stopped out, or I'm going to get up and, it's going to be trading it back at 135. And I got up and I was stopped out, and I'm at right where I entered the trade. And I'm like, okay, well, that's a scratch. I'll move on, so it's not, it's one of those situations where you either get lucky or you don't, based on, some headline that comes out. And so don't try to get too wrapped up into the, I'm, technically this is where it was, you just got lucky if you're trading the cable and you happen to make money right now. There will be resolution, and, we are going to know if there's going to be a Brexit deal or not, in the coming, probably in the coming, weeks. And if there's a Brexit deal, and and a deal gets done, you're going to have plenty of time to play the pound on the long side. You're going to be able to, get long above 135 probably, and, trade it all the way till, 140, 142. And if a deal doesn't get done, we're probably heading back to the mid, if not low 120s, and you're going to have plenty of time to be on the short side of that too. So I wanted to say that, because I don't want you to get too, worked up if you are on the right or wrong side of the cable at this point, so, I personally, I'm with Stelios when he says that a Brexit deal should get done. But I was reading this thing on Barnier, this kind of spotlight, if you will, on Barnier, and the reason why he's the top EU negotiator. And he's not an easy nut to crack. He's not going to give away the farm based on his background. And so the one of the things that is really, if you're like, man, I can't believe they just can't agree on fisheries or whatever all the the individual issues are. Really, you have negotiators that are not backing down. So to say that a deal's in the bag and it's happening, I tend to believe that a deal will get done, because it seems like the right thing to do, and it's going to benefit everybody. But is it? You know what I mean? Is it really? So I don't know. I think you got to be real careful making those assumptions today, and because look, I'll be the first one to admit, I did not think this was happening back here in back in 2016. I did not think that that was going to be voted on and that was going to happen. I did not think the UK was going to leave, and I was traveling to Hawaii as a result, and I missed that whole move. So I'm going to be the first one to say that I have no idea, and I'm going to just see what happens here. All right, let's talk about the rest of the market and kind of get a feeler on what's going on here.
Another vacation ruined by the market.
Yeah, that was one of those. There's no way the
I've
UK
had a
is ready to
few.
leave.
Yeah,
No way,
yeah,
it ain't gonna happen. And then,
yeah,
yeah, I was
yeah.
when I landed, I was like, wow, that was a big move that I just missed.
I'm not laughing at you. I'm
No, and you
laughing
know,
with you. Huh?
the sad thing too. I was in
Maui,
no,
paradise,
I was in um oh my god, I'm trying to think where I was at. Uh
Kauai.
Kauai. Yes, thank you very much. I was in Kauai. We were in we were in Honolulu Bay and you know, and up in that part of Hawaii.
Uh,
And I was you know, when everybody would be like sleeping, taking a nap after being out in the sun all day, I was out scalping the market because I was so frustrated that I missed the move. And I made a little bit of money, but it was like I was so frustrated.
yeah,
Anyway,
yeah.
okay.
Leave your devices at home when you go on vacation. I think.
Seriously, it's not a
Yeah,
bad idea. Okay, so let's
yeah,
let's talk about everything that's going on. So let's
yeah.
start with the
Okay.
euro. So you know, we had one of our newer traders jumped in. You know, we had a newer trader in the chat room today who was talking about you know, wanting to be short the euro, and I'm like, you know, I'm just not comfortable being short the euro because while it's above 120, I just don't want to be short. And I sent this chart out earlier today when we were trading, you know, below the one, you know, just around 120.10. This is a, you know, this is a you know, bull flag pattern, and it's a pennant, and we're holding the 38% retracement. And you might remember my tweet or last week in the euro. I'm like, the euro I think is toppy around the 121.60s, but I think we'd be lucky if we got back down to 120.80, and we made it to 120.80. I think that might have actually been the low, 120.78, which is a 38% retracement, and we bounced like a bat out of hell. So, you know, I think you have to be really careful being short the euro. I would expect that further dips down towards 120 are going to find good support. So for today, it's 120.80, right? And you have to still stay bullish. Now, I don't mind being long the dollar. I think you just have to be long the dollar against certain things. You can't, you know, you have to be very, very careful what you're you know, playing the dollar long against. But I do think that the euro is going to find some resistance up here, you know, and whether this is drawn correctly or, you know, this is probably more correct here, is it might be like a bull flag pattern, but we should find some resistance up here around the 121.50 level today.
Just a tip for the crowd: when I'm confused about, you know, which pair to go for, I just buy or sell the dollar.
Huh?
The
What you
Dixie.
mean?
Yeah,
What?
when I'm not sure, you know, if I should be long the pound or the euro, but I'm bearish a dollar, I'll just sell the Dixie if I'm not sure,
Oh, okay.
or vice versa, and then you don't have to figure it out.
Do you trade dollar futures or?
Yeah, yeah,
Okay. All
Dixie
right.
and CFDs, and you know,
Oh, okay. Got it. All
yeah.
right. Okay. So the cable. So we are bouncing now. If you guys don't recall, you know, we were on Friday. We failed the 135 level, and that it didn't look, technically it didn't look good, right? So to see us down here right now isn't super surprising, but I have to say that it's you know, it's obviously, you know, it's obviously this is all Brexit related. So I don't want to get too, you know, carried away saying, oh, you know, it's super bearish right now. I mean, technically, yeah, we failed above 135. You know, we took out a lot of stops down here. I thought we would pivot already, but we'll probably find some resistance. I mean, I'm just going to write down technical resistance here. 38% retracement comes in at 133.45. So let's just write that down. And again, I'm trying not to get, and we could probably say, you know, I try not to get too worked up with the cable on what it's doing because it's all over the map. right? 132, what is that? 132.25 is the low. So it's probably going to be support intraday. All right, let's take a look at the Aussie. So the Aussie, if you guys recall last week, the Aussie, and I don't know if you remember this conversation or not. I said the
do.
risk for the Aussie dollar is that we break through these highs, we stop at the 127% extension of the post-COVID move, right? Most traders aren't looking at that. So they wondered why, why did we stop there at the 100? Why did we stop there at the 74.50 level? Well, here we are. Now, I think that while we're above, this breakout point here and this trend line here, that comes in at 73.45. Okay, you got to be real careful. Okay, so 73.45, that's going to be support. Resistance is going to be 74.50. Whoops, dang it. How did that happen? And it's still bullish, but you still have to be, I think you have to be extra careful up here. I think we're still, you remember the conversation we had the other day. I'm like, it's bullish, but I'm very much considering going back to range if we fail here at the 74.50. Well, we did, but we're still holding up pretty well. So, it's not time to go, back into range, but I think you got to be a little careful. Okay. Aussie or Kiwi, sorry. So here's the Kiwi. The Kiwi came out of the ascending wedge, which was 71 cents. We should find some resistance up here, 70.50 roughly. I would say, because this wedge might be drawn more like this. So this should offer some resistance up here. So 70.50 support is going to be, 70 cents. So now that we've come out of that wedge, I am going to keep it in a range. Although I do feel that near term it's bearish. So near term, I think that the Kiwi is going to do this. I don't know if we're going to reverse all the way back down here, but I think this is now starting to turn more bearish. So support is at 70. Now let's take a look at the loonie. So the loonie, I had a little bit of longs from Friday. I picked it up down here below 128. This is 161% extension. So that 127.75 is going to be pretty important support today. Now, I still think it's bearish, but just have to realize that we did stall on pretty key support. This is the 161% extension. I think we got to keep it with more of a bearish bias while we're below, levels like this here, like that previous support around the 127% extension. So if we get back above the 128.60 level, I think that's gonna help. But man, the dollar Canadian was trading so heavy last week. It was a hard long. It was hard being long this particular trade. Dollar Mex. We were monitoring this wedge. I just, I don't know if that, this is still pretty heavy. I just don't know if I drew this correctly. So, however it's drawn, I'm not really too sure. but I think we'd have to get all the way back above 2020 in order for it to turn around a little bit here. So, and that's the resistance we had last week. Whoops. And I think it's bearish, but we're at risk of, flipping back to we're at risk of flipping back to range if we can hold some of these supports. I'm going to write down 1975 as support. I just don't think it's great support. All right, let's take a look at the dollars. Well, working our way down here. Here's the dollar Swiss. So the dollar Swiss still trading heavy. Horizontal support. I have this written down for a reason. Oh, no, I don't. Okay. Why is that there? I have no idea why that's there. Okay. We are still bearish while below 89.90, and support right now is, because this is 127% extension. So support is 88.90. And while we're below 89.90, it is bearish. And you see how just just when you think, oh, we're getting a recovery, it just gets slammed right back down again. So US dollar, Norwegian krona, look at the reversal here. I don't even know what happened there. Stelios, are you around?
Hello, I am. I've been looking at that as well.
Yeah, what happened out in Norway that slammed? Was there data out this morning?
It was data very early in the morning, which was better than expected, but the move happened afterwards. So I actually don't know. If somebody can help us, that'll be great. I don't know what happened.
I mean, well, the thing is, we're still below that 895. So while we're below 895, it's bearish, but I don't, I'm not sure why that was a pretty aggressive move, and that started hours ago. So
yeah, and it's not like oil did anything or risk in general. So
yeah,
I don't know.
so I mean, I'm gonna have to just write down 870 and then 896 because that was the resistance, right? And then we're just bearish while below it. I thought maybe there might have been something out there, but yeah, I don't know. That's an ugly move though, out of nowhere.
Yep.
I would call it beautiful, but
well, if you're long Norway, then yes, then it is. Good morning, Steve.
Good morning.
All right, so 91.50 is resistance in the dollar index. Let's go just take a look here. And actually, I can say 91.80 because that was the previous supporter, 91.70 here. But I think while we're below this previous high, which comes in at 91.50, and that's a spike low, then it's still bearish. So 91.50. And support is going to be 90.50. Okay, and let's see here real quick. Hold on really fast. All right, dollar yen. So this is exactly why, and I know you guys heard me last week, and I'll say it again here. This is exactly why I don't know how to trade the dollar yen, because just when you think it's coming out of like this triangle and you're like, okay, hey, maybe we're getting directional here, then this happens. Then we just rally right back. So I'm as I've told you guys, I'm at a loss with the dollar yen. I don't know how to trade it. I'm not sure what's driving it. So, and I know I've said that a lot the last couple of weeks, but this is really a great example of exactly that, right? 104.75. 103.65, and I think while we're there, in between those levels, I think you got to, if you're going to have a bias, like if you're like, well, I'm going to, I think it's overall it's going down. Well, then short it at 104.75 up here. And if you're in the other camp saying, well, I think the dollar yen's eventually going higher, then buy it down here. Now, those are your best plays right now, because where we're at is not giving us any indication whatsoever, right? Okay, let's go over to gold and then the S&P, and then I'm going to give it over to Steven Sellers. So we rejected where we were supposed to, 1850, right? That's what held us for weeks on end. Obviously, if we get above 1850, then it turns bullish. But for now, 1850 is resistance. That's going to be key resistance. And support is intraday probably 1815 for now. Okay, and then the S&P. So the S&P is, where are we at? Is bullish. We broke higher on Friday. So while we're above 3670, because that was the previous resistance, right? That's now support. And then just below that, I'm going to write down this is because it should be written down just in case, the market slips a little bit. You got to know where that next support level is. Actually, I think it's going to be down here, 3615. Let's write that down because I think it's trend line support. Resistance is 3753. That's the 127% extension. So there you guys go. And this is bullish still. All right, there's your bias chart. It's finished. Good morning, Steve, Stelios. How you guys doing?
Hello. Very well. Very well.
Morning.
Good morning. So a lot of volatility in, the cable.
Yes.
I'm not really too sure what to make of it. How about you guys?
Well, there's been a lot of talk, and remember on Friday before markets closed, everybody was kind of convinced that there's going to be a deal over the weekend,
Right.
and there was some positive news or let's say rumors from Barnier and all that. Apparently, they were close to some kind of a deal. Then Macron made a statement, and they said, not the statement, but he basically he implied that Barnier may be getting soft, and he said he's going to veto. And there's a lot of things happening, but at the end of the day, it's still just negotiations, right? And they're just trying to find
What
some kind
wouldn't
of a
I
deal.
give to be in the negotiation table? How much money these guys can make, right?
Yeah, well, you have things
trading the markets,
You have things like the fisheries, right? And now, for example, the French and other European countries, they have decent access to British waters for fishing. And in the proposed agreement, from what I understand, there's still going to be some access, but it's going to be quite limited. And no, Macron said, if we don't agree to have things as they are, then we're not going to agree. Well, we're not going to go for a deal. Well, then you're going to lose everything, right? So it's like, yes, you do realize that you're going to damage fisheries more than, at least with an agreement, you get something. But anyway, I guess,
admit ignorance, but I never would have thought some months ago that fishing is so important for any party.
Yeah.
Well, that's they think about, I guess, how much money is made, by each European country. And I could see why it's a big deal. But
is it so much of the GDP of, for example, France? If we were talking about Norway, yeah, but I wouldn't have guessed that countries like France have so much.
I think on the UK side, it's a lot lower than on the French side in terms of what percentage of the GDP. I think for the Brits, it's a matter of principle. For the Europeans, it's it's actual. money, right? It's a big chunk of, not a big chunk of the GDP, but it's something non-negligible. Let's put
It's
it
all
this way.
about caviar.
Caviar. Yeah, yeah, exactly.
I was I was trying to look for this really interesting read that I had on Barnier. I'll try to find it for the Forex analytics community. But he's obviously a very tough negotiator, and there's a lot of history behind why he's in that spot. Anyway, hey guys, I'm going to pass it over to you. I'm going to let you guys take over. Have a great day, everybody. And I'll see the Forex Analytics subscribers. I'll see you guys on the daily roundup here in a few hours.
Thank you.
You do, mate.
Thank you.
Bye-bye.
Thanks, guys.
See you, Blake.
So basically, let's just finish up with the UK because there was a lot of stuff happening and being said today. So there were sources saying that Barnier was downbeat this morning about agreement chances, and that the ball is on Johnson's
Which means
court.
that he was short cable.
Yeah,
at
maybe, and then
at that moment, you know how it is. You give hope on Friday, you sell into it. Monday
Yeah.
you come out. Oh, I'm afraid things look really tough in the negotiation. I don't think
Yeah.
we're
You
gonna
are
make it.
so jaded, Steve. Oh my God. You thinking a governmental official would do anything like that?
Absolutely not. Yeah.
Yeah.
And there was another. There was a story in the Sun over the weekend that Johnson is ready to pull out of talks within hours, and he's not. He will tell the EU he's not going to turn. His vows to stand firm, etc., etc. We've talked about this so many times. I just don't want to. I don't even want to spend more time on it. But bottom line, they're still trying to negotiate. They still have a few more days, and in the end, I still believe that even though there's a lot of, it's a matter of principle behind a lot of things happening. Like for the UK, it's about sovereignty, and they will control everything on their side, just like they used to before the EU, blah, blah, blah. I still think eventually there's going to be, both sides are going to show it in such a way that they're both going to win, and we're going to get some kind of an agreement, and we're going to
Stelio, you
stumble
remember
forward.
we said it. Christmas with Brexit, bro.
Christmas with Brexit. Yeah, exactly.
It
So
was more or
it's-
less unavoidable, if you ask me.
Yep, and it's a I don't know, I don't want to say a bad word, but it's a bad situation, the way they've been handling this for years now, and they're leaving it for the last 3 weeks. Well done, guys. You're really worth the money you're getting paid.
Yeah. Pretty sure
yeah,
they will leave it for the last 3 days, not 3 weeks.
yeah, 3 hours.
Might be the case, actually. I wouldn't be surprised.
Yeah, maybe. Moving on from that, thank God, we're going to get some more details about the stimulus package in the US apparently today. And so again, as we said, this is probably going to be just a bridge until we get the proper stimulus package.
Will Santa be able to fly a sleigh between the UK and Europe if this doesn't go through?
Yeah, as
still
long as
going to have clear skies.
As long as he doesn't drop a fishing rod, and
All right.
I tell you what, I order a lot of stuff from Amazon UK. I'm doing my last minute orders now because after the 31st, I don't know what's going to be the
yeah, who knows?
the status quo.
Yeah,
but
we can find out, I guess, but who knows? Yes.
Yeah. Otherwise,
just to be on the safe side, I ordered something for Jason today from Amazon there.
That's what I'm going to be doing.
Yeah. So at least I know that there isn't going to be an issue with that.
Yeah. Santa is Finnish, part of the EU. Yeah, Brock, that's actually right.
That's right. Brock, yeah, you're right, man.
Otherwise, very little data, very little actually happening. Risk markets are relatively quiet. Metals got a little bit pushed lower a little bit this morning. Gold is coming back to unchanged. Silver is lower. I still like those coming lower.
I thought Santa was from Coca-Cola, hence US. Was I mistaken?
What? What's the name of the village? Is it Rovaniemi? Is it somewhere in Finland, right? Anyway.
No, I'm kidding. Because
okay.
About Coca-Cola in essence building the whole.
Oh yeah.
Yeah. Santa Claus brand in essence, with the gifts and everything else, and
yeah. I don't have anything else.
I hope Santa doesn't get
Velu
COVID.
would know to tell us actually
Yeah, but
about Santa.
he doesn't
If Santa
speak.
gets COVID, we'll have to cancel Christmas.
It doesn't. Isn't he vaccinated?
Only Rudolph is.
Ah, okay. And the rest of the reindeers, I'm assuming.
Yeah, yeah, they're what they call those workers.
Yeah. No. Now it comes a period of the year that I'm gonna be hearing the Rudolph song, like with my son, like
Oh yeah.
25 times per day. That's gonna be fun.
Yeah, I don't have anything else to say. Unfortunately, it's been other than the UK. It's been very quiet over
One
there.
way or another, Stelio, you remember that we said that cable was perfectly set up for some kind of a disappointment, technically speaking, right?
Yes.
It was perfectly set up, and especially Friday, that stop hand that stop hand above 135, right? 134.83, which was the previous high, was fantastic. And the way we closed on Friday, that was an amazing risk reward opportunity to be short. I mean, this channel has proved its value so far, and the way we've rebounded so far looks corrective in nature. And as I've said, technical formations, of course, can't predict fundamental developments, but I've seen so many times in my career a technical formation that looks beautiful, somehow, some way it gets a very nice push from the fundamental side, and then it works out beautifully. So far so good. Nice rejection from this confluence of resistances, and needless to say, if we do break through this channel, I think we're headed a lot lower, with like 126.75 being the next downside target, and things can escalate from there rather quickly. If that means bad news having to do with Brexit. I had a conversation yesterday with a guy that calls me often, because he has like a lot of money to manage, and we have conversations. He was asking about Brexit. I told him that nobody can say what's going to happen in advance, but as you have said, Stelio, I think that even if we get like a bad outcome, after a short period of time, I think that buying an oversold cable is going to be a good idea, because I think things are going to start getting in place even post event. But for the time being, I think we should focus on technicals, and technicals tells us that for the time being, lower looks more likely. And even if we get a resolution, we might need a lot more time to confirm, and a lot of insecurity of if it's going to the more the days pass and we don't have something solid, the market is going to start getting even more worried that there's not going to be something happening on time. In the meanwhile, like Euro Pound has confirmed the breakout as well. We did break out last week on Wednesday. Thursday and Friday we back tested the broken channel, and today we're pushing higher, currently testing the 61.8. Listen, I do think that we're headed higher here. Might be temporary. I mean, I wouldn't be surprised to see the following thing happen: more and more pessimism creeping into the pound markets. So Euro Pound might keep doing its thing, pound versus dollar doing its thing. And then, after several days of pessimism, we might get like at the last moment something, and then, a big type of reversal. But until that happens, absolutely, certainly, there's no question about it. Euro Pound is in bullish mode. I do think we're probably going to be testing the 93-cent area again. I wouldn't even be surprised to test the 95-cent area again. So, that's that. What about Forest Park, Dimitri? Are you still in Barcelona? Yes. Yes. We are. Pepperstone as well. Forest Park effects if you live in the US or Canada. Pepperstone for the rest. You can find all relevant information here in the Forex Analytics sponsored. People can by registering from this link to Pepperstone, People can get 2+2 months of free premium service from Forex Analytics. If you have any more questions, just open a ticket, in the Forex Analytics page. There is at the bottom left, bottom right, there is an intercom button. You can open a ticket there and they'll help you out with it. Can the fundamentals override the technicals or the technicals fundamentals? And if so, why, please? Very frequently they align with each other. That's what I was saying before. Now, of course, there are occasions that technically something was looking like it would be doing A, and then you had some kind of a big fundamental development that was like, unexpected and wasn't priced in, and then you got, something totally different happening. But I would have to say that's on the rare side. Anyhow,
I would say that in the short term, technicals are a lot more powerful, obviously.
Oh,
than
yeah.
Fundamentals.
Oh, yeah.
Fundamentals have become less relevant, unfortunately, in recent times, and they take a lot more time to actually play out.
Yes, and they don't give you a timely signal.
Yeah. That's why I'm always early or late.
So, speaking of the pound pairs, I'm going to give a little bit more focus before we
More
move.
than that, they don't tell you when you're wrong.
Yes, that is also correct. That is a good point, Dale. So if you notice, the same type of thing happened in the Guppy, right? In the pound yen, we had this ascending channel, nice rejection from there. Same deal applies here. Now, let's have a look at a few of the crosses as well. Here is pound Aussie breaking through this channel. The path of least resistance clearly lower. And here is pound Kiwi. We talked about it last week as well. Listen, the pound Kiwi has broken through a massive long-term ascending channel, right? We had a couple of days of a recovery last week, and what we ended up doing is backtest the broken channel trend line support as resistance. We got rejected. So needless to say, doesn't look good if you want to be long. I wouldn't be long, let me say it like that. And here's the pound CAD for those that, even bother about it. Still trapped here in a symmetrical triangle. Eventually we're going to get a breakdown or a break higher. And, probably that's going to produce continuation. Clearly if things sour up in the negotiations, probably pound CAD is going to break to the downside. But, let's first wait and see what's going to happen before we can make assumptions about it. Your view on platinum breakdown today. Breakdown in platinum today? On what time frame? Because definitely not on the daily. I mean, yeah, is this a down day today? Yeah, we have a down day today. But breakdown? How? Where? I mean, technically speaking, has anything changed? No, absolutely nothing. We've broken through this corrective channel. We've had a massive move higher in a rather short time. At some point, we need to, work out the overbought conditions. Do I think we've changed something fundamentally here? No, I don't think so. I think that any type of pullback should most likely prove to be corrective. So I'm not really worried about it. Since we pivoted to the metals, here's gold. Needless to say that 1850 is a powerful resistance area. It was horizontal support area. It seems to be working as resistance for the time being. I think it's going to be important to break through 1850. It's going to increase substantially the chances that this was the low here. I already believe that there is a very good chance this was the low. If we break through 1850, chances increase substantially, if you're asking me. Having to do with silver, holding up quite nicely, clearly breaking through this channel trend line resistance is going to be more or less for me confirmation that that's it. We've corrected over time mostly, and less, in price, and we're headed much higher. So gold and silver, you can't be sure that the corrections are over, but I think the chances have increased substantially. And I would definitely not be in the short side. Let me say it like that, right? Now, you wish to do that, good, honestly, good luck. Having to do with stock indices, under pressure earlier on the day, but who cares, really? I mean, we've seen that multiple times before. The S&P at the 127% extension of the triangles range. Next upside target is the 127% extension of the COVID sell-off, which comes at 37.27. Listen, at some point, there's going to be a pullback. There is massive, massive euphoria in this market. I mean, we see, fear greed indices, euphoria indices, some of them like at all-time highs, DSIs. Listen, there's a lot of optimism in the market for no good reason, if you're asking me, other than the fact that they believe that the combination of, Biden with, the will of central banks to, keep pouring in, tons and tons of money in the market is going to be enough. And probably they're more or less right, but do I believe that in the short term, there is, in the long term, it's going to be a disaster. Let's begin by that, right? In the long term, it's going to be a disaster. In the medium term, I think it's going to be all right. Now, the question is, what do we do in the short term? In my opinion, there is no risk reward in being long anymore. I'm not saying I would be short, right? But I'm saying that I think the risk reward is starting to get really stupid in the short term. So, would I be buying here? No, I definitely wouldn't be buying here. Here's the Nasdaq as well. Nasdaq can, next upside target is almost at 13,000. It can make it there. There's no question about it. But as I said, I think the risk reward starts getting, stupid. Now, if you notice, the VIX has had a nice gap higher here. I want to see how this is going to work out, because we've started seeing the VIX diverge during the past like 4 or 5 trading days. Another signal that perhaps in the short term, it starts making less and less sense to be along the indices. I do believe, though, that any kind of decent few day sell-off is going to be a buying opportunity. So that's that having to do with this. There was a question about crude oil and natural gas. So crude oil, what can I say? It still looks good, right? Even if we have a look at it on the 4-hour chart. There it is. It still looks good. I mean, we broke higher from this channel. I see another consolidation here, nothing more than that. I think we can see even more upside. So, I wouldn't be fading it. I can tell you that much. Now, having to do with natural gas, we were talking last week about 2 scenarios. One of them was potentially a move toward this channel's trendline support once again, which beautifully confluences with the 61.8, 200 daily moving average also converging there. I think that's going to be a nice buying opportunity. So we're on our way there. Let's see. It's roughly at, let's say, 223. That's going to be an interesting level. I want to see what's going to, what this market is going to do from there. I'm still tracking this move as likely corrective. I think it's very unlikely that we're going to see levels below $1.50, where we had this like triple bottom or whatever you want to call it. So any decent pullback, and that will be a very decent pullback. I think it's going to be a nice buying opportunity, as long as the price action starts showing that the market is is starting to stabilize. Because I'm not advocating that somebody should buy any given level when the market looks like a falling knife. trying to catch a falling knife is not a good idea. But if it starts stabilizing towards there, or if we see a nice daily reversal, I'm going to tend to believe it because, my bias is that natural gas should also appreciate over time. I think it had a nice correction and, that's it. Having to do with other things like copper still remaining extremely well bid. 369, whatever it is, next upside target. At some point we're going to see a pullback, but I do think that 330 should be nice support from this point on. Here's nickel as well. Just look at this. I mean, these markets, anything that has like intrinsic value, they're doing
How about a
so
quarter?
well.
You did a penny, a nickel. How about a quarter and a half a dollar? Huh? If you
So
don't learn how to change your mind, you won't have any change left, and that includes pennies, nickels, and quarters.
that is actually a very good point. And Blake mentioned the USD NOK. Look at the daily candle today. I mean, no objections here. This whole rebound there gave me the ability to increase my position. I now have a full position. My cost average is above 10. So, I have no complaints here. I mean, I want to keep riding this. I think there's a lot more downsides. And even if you look at other pairs, like look at the USD SEC, look at this. Beautiful. And I think it might have a lot more downside. Now, in the short term, here I can say the opposite than I said about the stock indices. In the short term, many of these instruments start to look overdone, right? So I heard that. So many of these instruments start looking really overdone in the short term. So I'm not saying that you should be selling them here. What I'm saying is that I still believe that any rebound is a selling opportunity. So dollar, I think it's very bearish. Indices should be doing very well. All of that in the medium term. In the short term, you should start, you have exposure, good for you. I think you should start hedging a little bit because, at some point we're going to see some kind of an attempt for the market to, balance out things a little bit. Who do we have today, Dale?
We have a first-time guest, Katie Stockton, who was referred to me by Peter Bookvar, and Katie's been on CNBC, all the networks, etc. So looking forward to welcoming her.
Any relation with John Stockton?
I don't think so.
Okay.
You mean the guy, are you talking about Stockton, who was a budget director?
No, I'm talking about one of the best point guards in the NBA.
Oh, that guy, yeah. All right, yeah.
I'd like to have an autograph if that's the case.
Okay, and you know what? I'm so glad your note position's working out. You may have enough money to pay for Jason's toys this Christmas. So I'm glad for you.
Let's see when we're going to get them, because everything is locked down, so we have to order online, and everybody's ordering online, and deliveries is taking time.
Okay.
Anyhow,
so I'm going to thank you, Steve, and I'm going.
Thank you, Dale.
Katie, I'm getting you set up here as a panelist, and
great, Dale. I have you. It's Katie on the line.
Hi, Katie. Pleasure to meet you. How are you?
You as well. Very good, thanks.
Yeah, it took a while, and see how time flies. Have you ever used Zoom?
I have used Zoom. Are we doing video here, or are we just?
That's optional, but sharing your screen would be good.
Okay.
That's a green box.
Let's do that. We'll start with my Command Central here on my Bloomberg terminal.
Okay.
And let me know if you.
Okay, we've got it. We've got it.
Okay, good.
All right. So, Katie, I'd like to start, and Peter referred me to you, and I have a lot of respect for his work. So, any referral from Peter Bookvar is good enough for me. And then I went to your website and I took a look at your background, and maybe you could share with our listeners and people that will be viewing the video later a little bit about your journey and how you ended up with your own company at Fairlead Strategies LLC. What were you doing before you entered the business, and what was the catalyst for you getting into the business?
Hey, believe it or not, I've been in the business since I graduated from college. So I was really set on the
Okay.
path very, very early on. This was back in the early 90s. And I studied technical analysis, which is my discipline, and not just my primary, but my sole discipline. I studied it in college, and I had an internship with a firm called Dorsey, Wright and Associates. They do point and figure
Tom
charting.
Dorsey?
Tom Dorsey, exactly.
Yeah, sure.
Great mentor, of course.
Yeah, boy, you were blessed.
I was.
And a lot of floor traders, I cut my teeth on the floor of the CME. I mean, X's and O's were what those guys used. And
That's right.
they'd have their clerks run up and say, well, we have a reversal here, and they'd go to work. So, okay, Tom Dorsey. So do you still use point and figures?
I've sort of morphed in my discipline away from point and figures, in part because I ultimately moved from working on the buy side, sort of hand charting these point and figure charts, to then working, as a sales assistant for DLJ out in San Francisco, and realizing that the marketability of some of the point and figure charts for folks that were unfamiliar with charts in general, it just wasn't quite there. So it was difficult for someone in their young 20s to explain. And I went with something a little bit more accessible and digestible to the layman, which of course are these bar charts and moving averages and things like that. So that's become my discipline, is using the bar charts, using a lot of indicators overlaid on these bar charts, as you can see from my screen here. And then also being somewhat US equity centric, focusing on things like breadth and sentiment to the market internal measures, and volume, which of course is not really a part of point and figure charting. So.
Any books besides Tom? I cut my teeth on Technical Analysis of Stock Trends by Edwards and McGee. Any authors or any other mentors that you had in the business that were influential in your work?
The books, Edwards and McGee, of course, it's foundational. Technical Analysis of the Futures Markets is another one by John Murphy. All of these textbooks are really key, and certainly set me on the right path. So maybe they're not the most exciting reads necessarily, but they definitely give you a good foundation for technical analysis. And I also got a lot out of the CMT program. It's like our version of the CFA, the Chartered Market Technician program. And with that, it's a 3-level sort of exam series, and you do a lot of studying to pass that course. And that also sort of gave me the full breadth and scope of technical analysis. But as for other mentors, I would have to say Ralph Ekampora was certainly one of them. He actually visited my alma mater when I was sitting in that technical analysis class, and he stood in front of the classroom and tore the Wall Street Journal in half and said, "You don't need this anymore."
Yeah, that's great.
For a bunch of sort of finance 101 students, it was definitely impactful. And so he, along the way, has sort of shepherded me through the discipline and, sort of an advocate for it. So definitely someone who I've learned a lot from and admire greatly.
Okay, so I'm looking at your chart, and maybe we can start with what you have on top, left-hand corner, the Dixie. That's kind of our bailiwick here at Forex Analytics. And I see you use, looks like clouds, Ichimoku clouds, and I see a bunch of numbers there. Is that DeMark?
That is
stuff?
DeMark. So DeMark's pretty relevant right now for the dollar index. So I thought it might be a good place to start.
Okay, let's do that. Plus some type of stochastic at the bottom. Is that what you use for triggers or divergences? Maybe you could just give us a breakdown, talk dollar for a little while, and enlarge. Right. Can you enlarge that chart?
Yeah, let me navigate through these charts with you all. So just in the top left here is a daily bar chart. As you mentioned, there's Ichimoku, or the cloud model, a couple of different moving averages. I like to use the 50-day and the 200-day. You see a stochastic oscillator there. And then in the bottom two windows, you see more moving averages. Just I like to look at them in combination, and the trusty MACD indicator, which is a great gauge.
Okay. You still with us? Uh-oh. Katie? Yeah, we lost her. Maybe she'll log back in. I could tell it was going to be an excellent interview. What song is that, DJ? Katie lied. Maybe she's coming back now. Let's just hang out for a few minutes, see what, if she comes back. Darn technology. Oh, Taj Mahal. Okay. Who's worried? Anyone worried about what's happening in the world? Blues Brothers. Okay. I could always sing. You guys want me to sing? Or would we lose more attendees? Let me see if I have her on Twitter. See what she says. No guitar? Okay. Okay. Because it's always out of tune, Forex Scale? Or my voice? I am on Zoom. Okay. Let me look for her again. Okay.
Bill, I think I have you back.
Okay, great, Katie.
Forgive me,
Bye.
I'm not sure. It's some heavy duty charting software that we're running here. So sometimes
Oh, okay.
just won't cooperate.
Okay. Yeah, you know, our attendees are saying it's really hard for them to see the individual ones that you have up.
Yeah,
But if you
yeah,
can't
so
change them,
I can make them bigger here. So, and then
okay.
as I mentioned, that off to the right here is the monthly chart. So that's sort of the scope of it all. So we'll enlarge in this chart here to start, and hopefully that makes it easier for
Okay, that's good.
to see it.
Yep.
So here's the dollar index as mentioned, and notice that just in the past 2 weeks, it has a breakdown below a support level. So we were watching
Right.
this sort of 92 and change level.
Right.
It's also a level on the monthly cloud chart. So it was a very important level, not just on a short-term basis, but a long-term basis as well. And a pretty decisive breakdown. Notice it came after a failed test of the cloud resistance. So it came up above,
Right.
just posted one day above, but failed. I always wait for breakouts to be confirmed. And by that, I mean a couple of closes above a level. And that helps us avoid exactly what happened here, which is essentially sort of a false breakout. And now that we have this breakdown, it does support the downtrend that's already been in place for months now. But we have a DeMark signal, the likes of which we have not seen since this low here on July 30th or 31st. And this DeMark signal, you see it denoted by the 13. It supports a counter trend move no less than 2 weeks in duration. So we're looking for an oversold bounce. You can see it's also oversold based on the stochastics below 20% there. That would come back up into this potential resistance. Could even go as high as the cloud again without reversing that intermediate term downtrend. So that's what we would be positioned for, is for an oversold bounce, but something that's counter trend. And of course, if you're taking a trade and it's counter trend, you have to be nimble and very sensitive to any shifts to the downside.
How would you manage risk on longs here?
On longs, I would just make sure that the signal that we have from the DeMark indicators is not stopped out. And the beauty of that, some of these DeMark indicators, this one here is called TD Combo, is that they have automated risk levels that pop up on the chart. with the signals. So with that 13 signal, we have an automated risk level. It's 89.90. An open below that level would stop out of position. So if that's not too uncomfortable in terms of
No.
percentages, right? That's
No.
where the signal would actually be stopped out. And that's where we would close out long positions if taking counter trend positions here.
Okay. So do you trade the dollar? And do you do it with futures, or do you trade?
I don't. So I'm really more of an analyst than a trader. So I
I see.
have an independent research firm, as you mentioned,
Mhm.
Fairlead Strategies. After about
Right.
20 years on Wall Street, I went off and started my own shop. And now I publish research for not only institutions, which is, my area of focus previously on Wall Street, but also individuals. So we have a market letter that we publish every day, and then a couple of more, deep dives that we write every week. And the dollar index is a regular weekly feature of ours.
Okay. Have you traded in the past, Katie? Have you found that perhaps because of your emotional, mental makeup that you're a better analyst and trader?
There is no doubt about it.
Okay.
So
All right.
I have
Because
had a
I mean,
stint
I
as a
do
trader.
both. I do both, but I'll admit I'm a better analyst than trader, because when the emotions come in during the trading, and in fact, I've had people say to me, Katie, Dale, why do you even give us a target or objective? You never sit for them.
I know, right?
Right.
We let our emotional biases get in the way, don't
Well,
we?
first daylight syndrome. Anyway, so you're looking just for a bear market rally. Is there anything that would change the picture for it being more than just a bear market rally? Because there are still a few left long-term dollar bulls. Is there anything that would technically tell you that things have changed, maybe back over 94?
Yeah, I mean, back over the upper boundary, the cloud, it's a moving
Okay.
target. So we won't know where that is, once it's being tested, if it's being tested, but that would be certainly something that would be, it would enhance it otherwise. Now, the other thing I would focus on also is the chart. You see it's on a relatively new sell signal, and it's diverging. So it does support the downtrend that is underway here. Now, if we were to see a whipsaw, so a quick buy signal develop in the MACD, then of course that would be indicative of something perhaps more than what we're anticipating at this time in terms of an
Okay,
oversold
so
bounce.
short term, we're on a sell signal still, and we have a DeMark buy. How do you rationalize or rectify that? Do you take perhaps you have subscribers that have both swing trade accounts and position trade accounts, and in one they could be short the dollar, and another they might be able to just trade correction for scalp?
So we try to address all time horizons. So term work, which is of course derived from something like the monthly bar chart, which you can see here, and there's that monthly cloud model that I referenced. That will inform our short-term biases. So let's say, for example, you have a long-term uptrend for the dollar, and you had an oversold reading on a short-term basis. You would be more inclined to act on that oversold reading because of the uptrend than the current status, which of course is a downtrend and pending breakdown. So the long-term work always informs our short-term analysis, and we try to make sure that folks understand, the biases for those three different time horizons, knowing that our clients have varied sort of outlooks. We have some folks that are focusing 2 years plus, and then some that are even focused 2 days. So it really runs the gamut.
Okay. Maybe we could shift gears into something like gold or silver. Is
Sure.
that part of your coverage?
It is. We cover gold on a weekly basis as well. And of course, it's been in what I call correction mode because gold is in a long-term uptrend, and we'll give it a chance to pull up here. It's going to be slow. Long-term uptrend, but within that context, it peaked essentially in August and has been trending lower. So let me show you here.
Got it. The one on top.
reflecting the long-term uptrend. What we've done, we saw this breakdown unfolding below this previous sort of resistance and support level. And we also noticed that it had taken out a Fibonacci retracement. So that was about 1855. This is based on which contract is it? I think, yeah, February.
Okay. And we recently retested 1850. What's your technical bias now?
I think we should assume that this oversold bounce will falter somewhere in here below or near the downtrending 50-day moving average, because this breakdown below not only the previous lows, but also the Fibonacci, to me targets the next Fibonacci of importance, which is the 61.8% retracement of 1705 for gold. So I think as soon as we see those stochastics roll, that we'll have an opportunity to put out another short position on gold if you're so inclined, keeping in mind that it is a long-term uptrend. So it's still somewhat of a counter trend position in that on that front. But as long as you have the short-term gauges on your side, I think there's some value in taking that trade. I'd like to see these stochastics roll over. That's when you get sort of a sell signal. As it stands, we actually have a MACD buy signal on the daily. So I don't think the trade is ready to be put on right now, but I think that we'll have it within the next 1 or 2 weeks.
Okay, so when you get conflicting information from different signals, are there ever times when everything lines up, Katie? Or is there always a fly in the ointment that you just have to acknowledge? Is there ever really a perfect trade?
Market, that's when things try to, or when things tend to line up a little bit better. Can you hear me, Dale?
Yeah, every once in a
Okay,
while you
good.
break up on me.
Yeah,
But
I know it's not ideal. We have a lot of people in the
we'll
house
we'll
on
do
Zoom right
this.
now.
We'll do this again, Katie.
Okay, good.
I like your content. Why don't we wrap it with say the S&Ps? Are we getting maybe into an area where DeMark might be looking for some type of short-term pullback in NASDAQ or S&Ps?
Believe it or not, we are not. So this is the
Okay.
monthly. You see the monthly MACD diverging very strongly positive. Same can be said about the weekly MACD. And if you look at the recent action back to the September high as consolidation, you can arrive at a pretty impressive measured move projection from the breakout to new highs that we've seen. Whether you want to use the 61.8% extension, 4072, it's all very positive. Now, in terms of the DeMark, as to your question, we do not have any DeMark sell signals, and the sell signals that we've seen of late have not been super timely. If you look at these 13s, here was a sell signal, here was a sell signal, both preceded pullbacks by several days. So it is something we'll be watching for, but it's not something that we have at the moment. This morning in our morning research, we did highlight in the S&P futures another signal per the DeMark indicators that has lesser implications. It's a 9 on the TD setup, and I can show it to you here. You see this 9 with the arrow, and that supports 4 bars of consolidation, so an interruption in the up move. So we are looking for what we call a digestion week this week. Obviously, we've seen some pretty strong gains, so that
Okay, you cut off again, Katie. Why don't we do this when you come back on the air and I could hear you?
that's great. I'd love to join you again.
Okay, so why don't you show everyone your website?
Okay.
And how they could, follow you and, they could read your stuff without redacted statements. Like this interview has some redactions in it, but we're going to do it again. Fairlead Strategies LLC.com. Is that the website address?
It's actually fairleadstrategies.com. You can see it here. And if you go to this tab up here, you can go to request a trial, or to
Okay.
our services tab, and you can read a description of our services. You can sign up for our basic plan via the website or Basic Plan Plus. You can source past media appearances and events and really catch up on our views this way too. We do have a Twitter handle. It's at Stockton Katie, and we're not the most prolific people on social media, but we try to post there from time to time.
Okay, well, it was very nice meeting you, Katie, and we'll set up another time. I wish you and your family, your loved ones, that they remain untouched with what's happening with COVID, and that you wrap up the year strongly, and we'll get back together. And you know what happens when you survive an interview with me?
No, I don't. Tell me.
You'll become my trading warrior sister.
Oh, I
Even
like
though you're
that.
or you're my trading analyst sister.
I like that. I like the
all right.
word warrior. I'll take it.
All right. So you have to be in this business, right? I mean, if
That's
anyone,
for sure.
if anyone ever has this thought in their head, I hope this one works. I advise them to shut down their platform. So
That's right.
Great meeting you, Katie, and
You as well, Ted.
looking forward to doing this again without the sound edits. And
Yes, me too.
thank you for your time.
And happy holidays to you and yours.
All right. Thank you, Katie. Everyone, Katie Stockton, you can follow her at Stockton Katie. And as you can tell by this presentation, this is a very disciplined technical trader. So check her out. And that's going to be a wrap. And, don't just count your clouds or your DeMarc numbers, count your blessings. And we'll see everyone for Turnaround Tuesday. Adios. Thanks again, Katie.
Thank you.